Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me, as always, Shruti Mishra. These are the top headlines from the startup world. Fibe's NBFC entity, Early Salary, has raised 225 crore rupees through non-convertible debentures issuance with a face value of 1 lakh rupees each. The funds raised will further accelerate the company's innovation-led growth and strengthen its lending operations.
Deep tech startup Eon Space Labs has raised $1.2 million in pre-Series A funding round from MGF Kavach and HHV Group. The funds will support the launch of Mira, a high-res space telescope, and 4 new Lumira EOIR imaging systems designed for dual-use surveillance and disaster response.
EdTech firm Lead Group has clocked an ARR of 415 crore rupees for FY25 to FY26, marking a 30% year-on-year growth. Lead also closed FY25 with 367 crore rupees in revenue and achieved operating EBITDA break-even.
SoftBank Group is building up stakes in NVIDIA and Taiwan semiconductor manufacturing. The Japanese technology investor raised its stake in NVIDIA to about $3 billion by the end of March, up from $1 billion in the prior quarter, according to regulatory filings.
Amazon is restructuring the Wondery podcast studio by shifting its award-winning narrative podcasts such as Business Wars to Audible and consolidating creator-led shows into a new unit. According to a memo seen by Reuters, about 110 employees will be laid off as part of the process, and many will transition to other parts of Amazon. Those were the headlines that we're tracking for you this evening. But on what's brewing today, Sun Mobility, the Bengaluru-based battery swapping pioneer, has just secured a major funding boost led by Helios Climate to roll out Africa's largest battery swapping network. Backed by investors like Indian Oil, Bosch and Vitol, the company is bringing its proven high-speed modular technology to emerging markets, starting with Africa, while continuing to scale at home. So what's next for Sun Mobility, and how will it use the funds that it's raised in the $135 million war chest? Joining me now to discuss this further is Chetan Maini, the co-founder and chairman at Sun Mobility. Chetan, thank you so much for taking time out and being here with us on Startup Street. You know, you've raised the $60 million, which totals $135 million that you've raised this year alone. How does Sun Mobility plan to allocate this capital, and what portion is earmarked specifically for its Africa expansion versus, domestic scaling?
So, India continues to be the largest micromobility market in the world. So clearly, India is our base. And through our joint venture with Indian Oil, Indo-Fast, a lot of our investment is going to further strengthen our foothold in India, where we're looking at growing in the next year around 2.5 times to where we are right now. Coupled with that, the solution today is now ready for global markets. So a portion of these investments, are going to go into Africa and Southeast Asia. We're starting with Kenya and the Philippines as these initial markets on this front. And the third part is that we see the HEV business of trucks and buses also growing significantly. And we've been doing a lot of research and development in this space, and we're going to launch solutions next year from all the way from 3 tons to 55 tons. So the investments are to help build up our capacity for manufacturing, help expand into these markets domestically and globally, and into new products like buses and trucks that we need to build a strong portfolio across swapping systems for not just domestically, but also globally.
Sure. So, take us through, Sun Mobility's current presence. What are the countries that are doing well for you? How do you also plan to scale this presence further? And like you pointed out, a lot of this money will go to scale your battery swapping network across Africa, right? So what are the kind of partnerships that will be key to this execution out there?
So in India, we're today, in 23 cities, we have around 1,000 stations. Now in Africa, we're starting with Kenya. And like we have a partnership with Indian Oil, we are also partnering with large energy companies in Africa and in Southeast Asia. We feel that these energy companies have a lot of good forecourt, have a lot of presence in these markets, and enable us to scale much quicker, with both having access to real estate as well as capital as we think through these markets. So in markets like Africa, the Bora Bora taxis, which are these bike taxis, constitute almost 80 to 90% of all motorcycles sold in these countries. And they do over 200 kilometers a day, and swapping is an obvious choice where consumers can actually reduce their cost by 20 to 30%, and also, reduce their emissions. So it's really, a really strong market for us with the core technology that we've developed.
Sure. And like you just pointed out, you already have about 1,000 plus stations across India. With over 1.4 million monthly swaps already happening out here, how critical is the Indian market as a testing ground and innovation hub for Sun Mobility's global expansion?
So all our, most of our R&D is based here. We have over 200 people in research and development. So we develop our own batteries, our stations, our BMSs. We manufacture our batteries and stations in-house. All the software platform, from onboarding customers to billing to managing an entire network, is done at Sun Mobility. So we're a very strong tech platform, which we are now tweaking for these global markets, right? Payment gateways are different, certain nuances are different markets, but the core platform, the core batteries, the core stations remain the same. And the products they go into, a lot of Indian OEMs today already operate in these markets. And so we're now able to take some of these OEMs to these newer markets that we're going into, which also enables us to get more products on the platform, specifically in Africa and Southeast Asia.
Sure. And, what about revenues? What are you currently clocking? Where do you hope to end this year? Also, how are you sort of monetizing your battery swapping infrastructure across Africa and Southeast Asia? And what revenue streams are expected to drive long-term growth?
So clearly, Sun Mobility, in a way, sells its batteries and stations to its joint venture in India, to Indofast, right? So there's a revenue stream from sale of batteries and stations. And the fact that we have a joint venture partner, which is 50-50 with IOCL, there's revenues from the swapping of batteries, which is either a pay-as-you-go model or a subscription model on this front. So these are sort of the main revenue streams. We replicate these in global geographies, but also with our local partners, there are other revenue streams like royalties for using the entire platform that come in on this front. And over a period of time, the fact that we have a lot of data, we're able to monetize the data through other areas of fleet operation, insurance, and other aspects. So this sort of is a, it's a very unique area where it's an energy business with a data structure on it that allows us to have newer forms of monetization in addition to what we think of the core energy as a service business.
So what do you think makes Sun Mobility's battery swapping model a better fit for emerging markets versus, traditional EV charging infrastructures?
So, if you look at it, the cost of when you remove the battery from the vehicle, the cost of the vehicle goes down by around 40%, right? So clearly the cost of vehicle is cheaper than internal combustion engine vehicle. And people have no more concerns about refueling time, range anxiety, what happens to your battery over a period of time, how does it deteriorate? It's battery as a service. So it removes all those fears where people almost have infinite range. They take the batteries and swap it in less than a minute, and they're off and going. So this has sort of been the driver. Also, as the number of volumes increase in a city, infrastructure becomes a challenge, right? Where do you charge your vehicles, especially after you increase, 20 to 30% of adoption in a particular city? And these stations are located very conveniently. In many cities, we have them within 1 or 2 kilometers of each other. And so it really allows consumers to adopt and go electric without having any of these concerns at a much lower cost structure.
Absolutely. All right, Chetan, thank you so much for taking time out and being here with us on Startup Street. We wish you all the best on this journey going forward.
Thank you so much.
Well, moving now to our hot seat segment. What if AI agents could actually learn on the job, just like humans? That's the big bet Soham Ganatra is making with his startup Composio, which recently raised $29 million in Series A funding, led by Lightspeed Venture Partners, backed by some of the biggest names in tech, from HubSpot's Dharmesh Shah to Vercel's Guillermo Rock. Composio claims it is building the infrastructure that allows AI agents to improve through experience, not just better prompts. Already powering over 200 companies, the platform enables shared learning across agents, turning static tools into adaptive AI AI systems. To break down how they are doing it, joining me now is Soham Ganatra, the co-founder and CEO of Composio. Soham, welcome to Startup Street. You've said AI agents aren't stuck because of enterprise resistance, but because they can't actually learn from experience, and Composio enables AI agents to build intuition. Now, that's a bold promise. First, Soham, if you could elaborate on the core limitation here and how is Composio solving it? Walk us through how your reinforcement learning layer works in practice.
So thanks a lot for having me. Appreciate you inviting me here. So if you think about it today, AI agents are like an employee that joins on the first day and always remains on the first day, right? So if a new person joins our organization on the first day, they're like learning the ropes of how things work. But like by the 30th day, they've figured it out and they already know all the processes. They've like accumulated a bunch of knowledge around how your organization works, and eventually sort of they're able to accomplish tasks. Today, AI agents don't learn anything over time. So they basically, the way they operate is that they are still making the same mistakes on the 30th day, on the 300th day, and maybe on the 3000th day, right? And we are trying to solve that by making them learn so that like they can actually improve and they can be more valuable as time passes on. Yeah.
Okay. So, Soham, you're basically building what you call the missing infrastructure for AI. Now, beyond prompt tuning or workflow integration, you're enabling shared learning between agents. Now, what does that really mean and how does it work under the hood? Give us a real-world example of how a developer benefits from using Composio instead of starting from scratch.
Sure. So if you think about it today, like every time a developer tries creating an AI agent and like taking it to production, what they realize is that, oh, you know what? I'm dealing with like a bunch of authentication issues. I'm dealing with a bunch of sort of edge cases because Salesforce API doesn't really talk about the specific parameter that now I'm supposed to deal with it, right? Oh, maybe there's a rate limit issue here, and like I only could call this API like X amount of times. And
Yeah.
so they all face the same problem, they all solve the same problem, and like as the sort of agent like goes more and more in real world use cases, as you see more and more sort of production use cases, you figure out more and more of these problems over time. What we do is we build a shared sort of learning layer that allows all the agents, like whatever problem they're facing, to sort of accumulate the knowledge at a single place and then allow developers to sort of tap into it. So when they are building any agent out there, they are able to just go live without worrying about all of these issues, right? And so one example of this would be like maybe GitHub has a different enterprise APIs that you don't really know about. And like now that like you are tapping into the shared learning there, you don't really need to know about it. You just like get the advantage of it directly.
All right. You already have over 100,000 developers on the platform. Tell us what's driving this adoption. Who are your early believers? And give us a sense of your current business growth numbers. What kind of revenue traction are you seeing at this stage?
Yeah, I think like the promise that we made, which was like, hey, you all will be facing this issue, kind of resonated with a lot of folks out there. We grew like really rapidly into 100,000 plus developers. We have like a lot of folks from YC, like very small startups, or just starting up, starting to use us, to some of the largest customers out there that you could think of in Fortune 100 companies already using us for their production use cases. We essentially have more than 200 plus companies out there that are paying us millions of requests like being sort of managed on a day-to-day basis. And I would say we are in seven figures revenue. Yeah.
Okay.
Currently.
7 figures revenue. Okay. Give us a sense of what developers and companies are building with Composio today and what use cases are gaining the most momentum.
Yeah, I think like you of course start with like a very base set of use cases like let's say support request automation, right? So you have requests coming in from Zendesk, Slack, Jira, and like what you want to do is you want to figure out like how do I sort of take this and like automate a bunch of these things using Composio. Maybe the second sort of very popular set of use cases are developer tooling, right? I want to build a sort of pull request review bot. I want to build something around sort of my sort of deployments, right? And managing them. All of those things you could do through Composio. Then we have like a lot of sales automation going through us. Yeah.
Sure. Soham, tell us what's the bigger vision here? Is Composio laying the rails for a new class of self-improving AI software?
Yeah, I think we're trying to do that, right? The idea here is like instead of like static AI agents or static AI, the way you think about it, we essentially are trying to build like a sort of dynamically learning AI that keeps improving over time, that keeps understanding what are the mistakes it's making, and then basically adheres to whatever sort of the best process that you follow, the sort of the depending
Sure.
on like your liking, and like make sure that it gives you the best experience out there.
Okay.
Yeah.
Let's now talk about your Series A funding with this $29 million in the bag. What's the immediate roadmap? What are you prioritizing? Is it team, product, markets? And how do you plan to stay ahead of what's becoming an incredibly competitive space?
Yeah, I think like what we are focusing right now on first is improving sort of the infrastructure because we are at the end of the day an infrastructure company and we need to scale up rapidly. So a lot of like focus as a team is going on that. The next focus is like building the skill coverage. Today, we already have 20,000 plus things that an AI agent that could do on top of Composio. We are rapidly expanding that and plan to get to like million skills out there. We're also working on reinforcement learning and essentially a lot of research around that and like how do we sort of develop like sophisticated like learning sort of patterns and like understand them quickly. And like, of course, to do all of this, we are like hiring at a bunch of places across US and India, and a lot of like focus going towards that.
All right. And on that note, we'll have to wrap up our discussion. Many thanks, Soham, for joining us on Startup Street today and wish you the very best for all your growth plans.
Thank you. Thanks a lot for having me.
With that, it's time for us to head into a short break. Coming up on the other side, Stan, the mobile-first social gaming platform, bags $8.5 million in fresh funding. We speak with Parth Chadda, the co-founder and CEO of Stan, on the other side. Stay tuned.
Welcome back. You're still with us on Startup Street. Stan, the mobile-first social gaming platform, has bagged $8.5 million in a fresh funding from a stellar lineup, including Google's AI Futures Fund, Nazara, and Japanese gaming giants like Bandai Namco and Square Enix. Built for Gen Z gamers and creators in mobile-first markets, Stan lets users build communities, monetize content, and turn gameplay into full-blown social experience. With over 25 million downloads and deep roots in Tier 2 and Tier 3 cities in India, Stan says it's only getting started and it's gunning to become the next billion-dollar social platform out of India. Joining me now to discuss this further is Parth Chadda, the co-founder and CEO of Stan. Also with me, my colleague Shruti. Parth, thank you so much for taking time out and being here with us on Startup Street. You know, what, according to you, makes Stan stand out in India's gaming and social media ecosystem? And how is it sort of different from, global platforms like Discord or Twitch?
Thanks for having me here. I think that's a brilliant question. I get this question a lot, right? So, see, Stan is basically India's leading gaming platform, which is a lot social, right? So, gaming is all about interactions. People want to chat, they want to hang out. So, it's basically the ultimate hangout place for audience who love gaming, right? And it could be like casual games, it could be like competitive esports, it could be anything. And if you look at how the market in gaming has evolved in the last couple of years, we've seen a lot of PC wave, but mobile disruption has really, taken this 10x, right? And if you look at Stan's growth as well, we've sought a lot for the mobile audience. I think the existing platforms which were there were really not making sense for the markets like India and other emerging markets. That's where we cracked, and there's something called as so Stan's biggest feature is the Stan Clubs. It's basically a chat room where these users hang out and they talk and they really build these true, connections. I always say that gaming is all about content, rewards, and companionship. Companionship is basically the fundamental stuff where it all begins. None of the existing platforms was really solving for the companionship. That's where we've really doubled down. And yeah, I think that's been the success driving force for us. And that has led to the organic growth.
Sure. Parth, this is Shruti quickly stepping in. You spoke about gaming really evolving in the last couple of years. So tell us, what does this $8.5 million fundraise signal about investor confidence in Stan, and how are you planning to deploy this capital? Will it be across product markets, partnerships?
Yeah, thanks, Shruti. So, this fundraise is definitely going to help us scale further. Like I said, we've just scratched the surface. India itself is about 550 million gamers. We've just reached like 25 million users. So with the fresh funding, and that's definitely like coming from some of the big names like Google and some of the top gaming corporates like Bandai Namco and others, we have now the next 18 months to us to scale this, expand our footprint in India, and also test the waters with other mobile-facing markets, which are showing similar trends around gaming, be it in creator economy space or just social stuff around gaming. So that's where we're going to be using our funds. And I think one important aspect is to build around product is we're leveraging a lot of AI. That's where Google AI Futures Fund is definitely, come in, and leveraging artificial intelligence to help creators produce content, make it safer space for people to hang out, get good suggestions around, building friendships. I think that's something which we are going to be doubling down in the next couple of months.
All right. And, with over 25 million downloads, right, how is Stan sort of capturing this Tier 2 and Tier 3 market in India? What kind of behaviors are emerging from these non-metro gaming communities?
That's a lovely question. I think I can tell you, we were messing up in the first year. We were just building for the Tier 1 crowd, right? But if you look at gaming, it's all about masses. Like, people are making friendships around gaming. So it has to be supportive on low-end devices. It has to support even on 3G, 4G internet. Like, Stan works phenomenally well in a 4GB phone as well, right? So what kind of trends we saw was some of the big games, like, your shooter games, which are very popular, the social games, which are very popular in India, are loved by even the Tier 2, Tier 3, cities of India, right? Metro cities, definitely people have that mindset that there is a high ARPU, ARPU, which we see, but every Tier 2, Tier 3 city has a Tier 1 inside. But if you want to capture the masses, you got to make your product really accustomed to the audience, and that's what we've been building on. And it's very vernacular as well. Like we see a lot of people talking and chatting in different languages on the Stan platform. So I think these are some of the insights and trends which we've been noticing and just building around it.
Right, let's take us through the kind of revenues you're clocking currently and where do you hope to end this year with, and how is Stan really helping creators monetize their fan base? Tell us what kind of revenue streams are gaining traction on the platform.
Sure. So on the platform, we have two revenue streams today. One is like user spending for social economy. Like when you come on the platform, either you come through your friends or through your favorite creator. So if you want to play with them, hang out with them, socialize with them, you actually go through a currency called Stan Club Passes. You can relate it with those social cafes and arenas where you used to go in gaming world, and you can enter there for free. And then when you feel like playing, you recharge your card and then you go ahead and spend. Something similar happens on Stan in terms of users. They come and top up these in-app purchase, and then they spend across clubs. That's like the lion's share of our revenues today. The other interesting revenue source, which we have seen growing really aggressively, is a lot of game publishers and brands are spending money with us. I mean, we have about 25 million plus users, and we have 1 million plus influencers, creators building their world on Stan. Like you asked me, right? Like, how are these people able to monetize? So when a user comes in the app and the creator is making them hang out, they spend, and the creators make money out of it. And the game publishers and brands, they tend to spend to get distribution. So they get access to a large crowd. That's something which is like an interesting revenue source. And that's why you see a lot of these game publishers, like these Japanese publishers from US market, they're coming and partnering with us as well.
All right, Parth, thank you so much for taking us through those details, but we're completely out of time on this edition of Startup Street. So thank you so much for joining us on the show.
Thank you.
Well, with that, it's a wrap from Arundhati and me, Shruti, on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.